Welcome to Invest. We're talking about investing, finance, and professional development. So I was just spending some time onto studying the Wall Street cheat sheet. I was just like looking into the webs, and I realized that it's been a while since we last discussed on what part of the market cycle are we part of right now, knowing the fact that we've been experiencing consecutive days and weeks and months of volatility so far. But as I was comparing the chart, like side by side, looking at the chart, let's just take a look at Ethereum chart real quick as a reference, right? You could see that we have pumped up ever since we were at the 1750, all the way up to close to being 5,000, right? And as we got to 5,000, we've been sliding off following this red line that we've been trending so far, right? And we had like basically 2 times of a rally, right? But pretty much just like a zigzag on a sideways fashion, obviously luring investor coming in thinking that that was the rally, that we are done with the whole bear trends. And to our surprise, right? Or is it not a surprise? It's been kind of zigzagging on a sideways fashion. Similar to how this chart is depicting. If you look at the bottom right here, as we hit the panic, which we've been experiencing ever since we got the complacency when we were around like the $4,800, and subsequently slide down because of just like fear mongering around the war going on, the COVID situation that's going on, interest hikes that's going on, and then people start thinking about buying in. We had some days that are relatively green by like 4 to 5%, but eventually we just kept sliding off within this pattern, right, of zigzag downwards, right? So we were in this like downward trend ever since last year of November. And at the moment right now, we could see that clearly we have had twice of a rebound, right? Once was occurring starting on January 25th, and then we bounced up all the way to February 9th. And that was like the classic bull trap. Investors were thinking that, oh, we are out of the bear trends. And it was kind of true in a way. We did break above it, and we were trying to stay above or stay around the red line for quite some time. But eventually you could see that we clearly came back down and still sustained back into the bear trend. And at the same time, we have gotten out of the bear trend with the secondary bullish rally after the previous FOMC meeting. And you could see that we started the rally somewhere around like March 13th, surging all the way up to the April 3rd based on the chart. And now you can see that clearly we're leaping down again, zigzagging away from the trends. But you could see that clearly we have broken out of the bear trends, and now we're going back up to the bull trends, forming that new escalator. But now what's going to be the imminent outlook for the market dynamics going forward? Let's just go back into the cheat sheet that we have, right? So it seems like we have came up, right, and we've been sliding down. And I think what needs to happen technically is that because of the fact that we are within the we out of the anger stage, technically, we need to head towards the depression stage, right? Which makes sense, right? Because of the upcoming FOMC meeting, because of the interest hikes that has been doubled from 25 basis point to 50 basis point. Investors going to start questioning like, oh my god, we are just selling off like into the abyss, right? And if you look at the orange section right here, ever since the bull trap that we've incurred, right? Looking back into the Ethereum chart with the bull trap and subsequently people lured in and buy in, you could see that clearly we've been in this trend. So we are within the orange and the red section at the moment, and I think we might see more negative pressure coming, right? Until we hit to the point where people start to think about like, oh my god, my retirement money is gone. How can we pay for all this new stuff? I already took a mortgage out to be buying a new home. I'm such a stupid dumbass. Things like that. But that's also when it's the point of the bottom that's being formed. So I would say we are relatively near the bottom, right? And when you saw that drop earlier on, right, that we were incurred back when we were at the 2,435 back in a day, and that's dated around like January 24th. If you match that up with this this anger valley right here, matching with the next valley that you see in depression mode, you could see that it's not like a seismic drop in comparison, right? It's like an incremental downward, separation. And by then, that should be it, right? And then we should subsequently see more of a relief coming, and subsequently recuperate back up to more of a normal cadence, knowing the fact that we've been baking in all the negativity so far. And that should subsequently allow us to go towards the disbelief, which is the next stage. So I think based on the similarity in terms of the market cycle chart that we're studying in front of us, I think we are within the anger and depression stage, and I think we're heading towards the ultimatum of the depression valley before we recuperate back up to more of a normalized cadence and going back up to the next level, which is the sucker rally that we'll be expecting. That's when people are thinking like, oh, wow, we're done with this whole bear trend. We're done with this whole recessionary fear. But that's also when the whales will trap you and subsequently force you to hate yourself all over again. It's kind of like a psychological game, right? And not believing this rally will sustain. But to our surprise, that eventually get over the disbelief hurdle, you'll go on to hope, which is right. If I think my face is covering it, so let me just go back up so you could see it. As you pass disbelief, you go up to hope, you go up to optimism, belief, thrill, and euphoria, and that's when the market trend restarts all over again. So that's my read on the market cycle. I think it logically makes sense based on the timing of the elements. So technically, if you believe that the trends will be following the line right here, you can see that the pain will be quite elongated in comparisons to the positive bullish pressure that we saw, the rally, the super happy moments that we were experiencing within hope, optimism, belief, thrill, and euphoria. But just know that the market cycle will eventually end sometimes. I cannot time to give you the specific timing, but it will eventually end, and that's when you will receive the recovery and the recuperations of the market cycle restarting again. Okay, but so that's my depictions, my assessment on where we are in the market cycle dynamics. Let me know if you have any questions in the comment section below, or feel free to correct me if you feel like that I'm mistaken. But I think it makes sense if you compare the side by side. All right, so appreciate you knowing the fact that we're not surprised anymore, and I think we have our marching order. Appreciate you. Take care. Bye.